Right now, as the market is live, MSP Recovery Inc., ticker MSPR, is trading at 0.5917, and it is on an absolute tear, up 0.2751 or 86.89% on the day. This isn't a small cap stock creeping up. This is a full-blown explosion. The volume is staggering. Over 251 million shares have changed hands. To put that in perspective, its average volume for the last 3 months is about 21 million. So we are seeing more than 10 times the normal trading activity, a truly exceptional event. And this is the moment where the script gets flipped. The immediate expectation when you see a move like this is that there must be some company-altering news, a massive legal victory, a buyout offer, a blockbuster contract. So you go to the news wires, you check the SEC filings, and what do you find? Absolutely nothing. As of this moment, there is no press release, no Form 8K, no major news story from a reputable outlet that explains why MSPR has suddenly more than doubled its 3-month average volume and exploded nearly 90% in value. This is the absolute core of the tension in the market. The expectation is a cause, the reality is a vacuum, and that vacuum is being filled with 250 million shares worth of speculation, algorithms, and likely a massive dose of confusion. This is what makes markets so fascinating. The price is supposed to reflect all known information, but right now the price is screaming about something the public seemingly doesn't know. Now, let's establish the common ground. Most investors, particularly those building long-term portfolios, see a stock like MSPR and have been trained to run in the other direction. You look at the 52-week range, which bottoms out at under 20 cents and has a high of $35. That 35 isn't a typo. That's how far this stock has fallen. This is a name that has been a poster child for post-SPAC collapses. It's been hit with NASDAQ non-compliance notices for its low price and has had to enact reverse stock splits just to keep its listing. This is the kind of stock that shows up on the top movers list on the Robinhood app or SoFi Invest and is viewed by many as a pure gamble, not a serious investment. The general belief is that any move like this, especially without news, is a classic pump and dump, a scheme driven by retail traders in a chat room, and that it's destined to crash back to earth. But here is where we challenge that. A 250 million share volume isn't just a handful of traders. That is an enormous amount of liquidity. We're talking about a significant portion of the entire company's float, if not the whole thing, changing hands in a matter of hours. This isn't just a few people using the Robinhood stock trading feature. This volume suggests something structural is at play. This could be a catastrophic short squeeze, where anyone betting against the stock is being forced to buy back shares at any price, creating a feedback loop. Or it could be the work of high-frequency trading firms, the kind that use sophisticated platforms from interactive brokers, battling over fractions of a cent and triggering momentum algorithms. Or it could be the market front-running a rumor, a piece of information that is circulating on trading floors or in private channels that has not yet hit the wires. This is a market-wide phenomenon, not a small-time event. To understand why MSPR is even capable of this kind of volatility, you have to understand its business, which is as complex and high stakes as the stock chart. The name MSP Recovery says it all. MSP stands for Medicare Secondary Payer. The company's entire business model is built on data analytics and a legal-heavy collections process. In simple terms, they have a massive and complex platform designed to identify medical claims that were paid by Medicare or Medicaid, but should have been paid by a primary insurer. Think about a car accident where Medicare pays the hospital bill, but the auto insurance company was actually the primary responsible party. MSPR finds these claims, goes after that primary insurer to get the money back, often through litigation, and then keeps a very large portion of whatever it successfully recovers. This is not a clean, predictable business like Apple stock, where you can count iPhone sales. This is a lumpy business. The company can go quarters with very little revenue and then, theoretically, announce a $50 million or $100 million settlement out of the blue. The potential portfolio of recoverable claims is in the billions, but the actual collected revenue has been sporadic and, relative to the initial hype, very small. This is a show-me story, and for years they haven't shown the market enough to justify their original valuation. That's why the stock is at 59 cents. That's why a Fidelity mutual fund or a Schwab Intelligent portfolio wouldn't touch this for a client's individual brokerage account. The trust has been broken. The history here is just brutal. This company came public through a SPAC, and it has been a catastrophic failure for anyone who held from the beginning. The collapse from that 35 high has been relentless. The reverse splits are a classic sign of a company in deep distress, essentially a financial maneuver to prop the share price above $1 to avoid being delisted. This is the history. This is the context for everything. It's why the expectation is always more pain, more dilution, more disappointment. It's the reason a conservative investment help service or a manager at Fidelity Wealth Management would use this stock as an example of what not to buy for a Fidelity IRA. So, we come back to today. An 86% spike on 250 million shares. Is this the big one? Is this the rumor of a legal settlement so large that it finally validates the entire business model? Is it a short squeeze of historic proportions? Or is this a technical, algorithm-driven spike before the unconfirmed third-quarter earnings, which were mentioned in reports from before today's spike, come out and disappoint everyone, sending it right back down? The volatility is so extreme that many investing sites or trading platforms might be limiting or halting new buy orders. This isn't a Tesla stock move on Battery Day, which is backed by a real product announcement. This is a move on pure speculation. This is where I have to ask you to weigh in. Comment below. What do you think is driving this? Is this 86% spike a genuine sign of a blockbuster legal win that's about to be announced? Or is this the most violent short squeeze we've seen this month? Let me know your theory. Looking forward, what's the scenario? The expectation for a stock like this for any self-investing trader is buy the rumor, sell the news. If you're in this, you're probably looking for an exit, because the risk of a halt news pending announcement is incredibly high. The reality is that this stock is now a purely binary event. If a 9-figure settlement is announced tomorrow, 59 cents will look ridiculously cheap. On the other hand, if Q3 earnings land with a thud and no other news comes out, this stock will fall just as fast as it rose, and it will be back at 30 cents before the week is over. The risk is total. This is a casino, not a high-probability investment. Platforms like Fidelity, with their Fidelity mutual funds and Fidelity ETFs, are built on avoiding precisely this kind of risk. Their entire philosophy is about steady, predictable growth. This is the antithesis of that. But for a day trader with a high risk tolerance, perhaps using the advanced tools on Interactive Brokers trading platform, this volatility is exactly what they look for. This is a perfect, if exceptionally dangerous storm. To wrap this up, the story of MSPR today is truly a fascinating one. The market, based on all its history, expected a slow fade to delisting. The reality we are watching live is an 86% explosion on 250 million shares driven by a complete and total void of public information. This is the market at its rawest. It's a signal, but we have no idea what it's signaling yet. The disconnect between the price and the public facts has never been wider. And that gap, that tension between what is known and what is priced, is where traders either make a fortune or lose every last cent.